Good morning, everyone. Today's date, 1/26/2013. We're updating our worldwide trader network around the world and U.S. traders and international traders. This is the Dow Jones. We've gone parabolically up to where the financial crisis started. What does it mean? It means that the following. The risk on is back in the market. Lots of the uncertainties that were in calendar 2012, the uncertainty with the U.S. government and the fiscal cliff was taken off of the table. And we've gone parabolically up. We're back to these 2007 highs on the Dow Jones. And we're in the beginning bull run. And I said bull run, and bull runs have to have pullbacks, and we will. And what it means is that the amount of liquidity that's in the system worldwide from printing money and taking these uncertainties off the table and the risk is what has pushed this market higher. There is a lot of money on the sideline. The bond bubble, bonds come down, money comes out of bonds and go into what we call equities, stocks. And the whole idea about it is that worldwide, that money that's on the sideline has to find a new home, and that's going to support this bull run. And every bull run will have pullbacks, and the year is still early. It's only 1/26 of calendar 2012. So therefore, we're hitting a major wall of resistance, and the bull is getting tired. One of the things that we look at over multiple years is, where do we leave that bear market once and for all? And when do we get that next multi-year bull run is going to be decided by earnings, growth, and everything else. But right now, we have everything for a perfect recipe. And what has happened is, everyone, just so you know, once the fiscal cliff was resolved, we've gone parabolically up day after day after day after day. The thing about it is, we're overbought in the Dow. And every new bull rally has pullbacks to buy dips. Money will come off of the sideline unless there's some catastrophic event that would derail this whole thing. Right now, money has to find a home, and the worldwide economies have improved significantly, which is a bull. And the thing about it is that we have been in a long multi-year bear for over 12 years, and this is the 13th year. Now, it's taken, in this last run from the last bull rally that happened in the 2003 lows, we went up for multiple years here, and we're right back up here where everything started. It's right up here. Here's the tops. And we're going to challenge that wall of resistance. In the short term, we are overbought. We will buy the great quality equities that have proven themselves in the earnings cycle. The S&P 500 and a lot of Dow components are going to report earnings this following upcoming week, starting on 1/28 of 2013. And we're going to get a very good look at where the corporations in America, called CEOs, start to want to spend money, and that they start investing. Now that taxes are in, they're higher and everything else. The bull is here. The Federal Reserve with QE3, it's working. It's working around the world. Growth is starting to return, not at the levels that we would like to see it yet, but it's starting to return around the world. So all of the concerns and uncertainty is finally coming off of the table, which is good for a bull run. It'll be a stock picker's market this year. We will go into other analysis. I will tell everyone right now to have their seatbelts on and that equities in the shorter term, and I say short term, are going to hit the wall of resistance levels. Some of these equities that we trade have done tremendously well. Priceline, Netflix, Google. Now, Apple, on the other hand, that's a different story, but these are Dow 30 stocks. So, wall of resistance is in play. Each time we go a little bit higher, we're going to get that much more overbought, where a 5% correction would be exactly what the market needs. And what that does is it sets up where new buyers can come into the market. The retail trader is starting to look at the markets when things go up. A lot of people sit on the sidelines, they don't get in. And when we look for bull runs, we look for 5-day runs. And we certainly got the breakout here, 1, 2, 3, 4, 5, 6 days, the last 6 days, straight right up to the resistance level on the Dow in this bull run. Look for corrections to come, as they will. And as we continue to go through the earnings, and the housing market is working, the financials are working. One of the things, though, that we have to worry about is what the Democrats and the Republicans are going to do moving forward. The market looks past that because what they're looking for, once again, is that do these people in Washington and D.C. ever get their act together? Well, that's yet to be seen. The Federal Reserve, Ben Bernanke has done his job. He's got risk on coming back into the marketplace around the world with massive liquidity injected into the system. And when you have massive liquidity into the system, that supports these bull runs. And once again, the longer term is what we're interested in. To break a bear, multi-year bear, it started in year 2000. And the thing about it is, we are right here where the financial crisis started. And the nice thing about it is that money will return to equities. And growth within the overall picture, the growth that companies report, gradually and incrementally will get better and better and better. And what I will tell everyone, I have been waiting for a number of years, calendar years, over 12 years since that bear started in year 2000. We've had these great little bull runs in these financial crises. Well, what we're looking for in this calendar year that has just started in January is that we pull back, new money comes into markets, the money that's been sitting on the sideline for many calendar years has to find a home in equities. And you can still continue to go higher and higher and higher when you get dips, but I will just tell everyone, it's exciting to see that maybe for once that the overall broader market within the U.S. and worldwide is money has to find a home in equities. Buy the dips, understand support, understand resistance, understand overbought, and buy the good quality dips. There will be circumstances of events that will trigger some selling. There will be some profit. It's just the beginning month of 2013 in a ripping bull market, and a lot of that uncertainty has come off of the table. And people will get more comfortable and they will find their way into equities. The risk on trade is on in the Dow.